Hello, everyone. Welcome to the market opening bell on Monday, April 7th. First, let's take a look at the US stock market. US stocks plummeted for two consecutive days last Thursday and Friday, wiping out more than 6 trillion US dollars in market value. The Dow Jones Industrial Average dropped nearly 4,000 points over the 2 days, closing at 38,314 on Friday, down 7.9% for the week. The S&P 500 closed at 5,074, falling 9.1% for the week, while the Nasdaq ended at 15,587, down 10% for the week and more than 22% from its peak, officially entering a technical bear market. The VIX, commonly known as the Fear Index, surged over 40 points, hitting its highest intraday level since August 5, 2024. On the economic data front, U.S. non-farm payrolls in March added 228,000 jobs, far exceeding market expectations of 137,000 and surpassing the downwardly revised figure of 117,000 from the previous month's 151,000. However, the unemployment rate unexpectedly rose to 4.2%, higher than the anticipated 4.1%. Currently, the market's focus is squarely on tariff issues, rendering economic data less significant. What did Trump say? Responding to reporters at the White House, he said tariff measures are progressing smoothly, likening it to a patient undergoing surgery, a major event. He claimed other countries have taken advantage of the US for years and are now scrambling to reach deals. He predicted the US would rake in 6 trillion to 7 trillion US dollars, and both the stock market and the US would prosper. Despite the US pushing ahead with tariffs, China immediately announced countermeasures, including a 34% tariff on all US goods, sanctions on 27 American companies, a ban on agricultural and poultry products from 6 US firms, and investigations into at least two others. In response to China's retaliation, Trump said China had misplayed its hand and was panicking, calling retaliatory tariffs a mistake China absolutely cannot afford. He insisted his economic policies will never change. If both sides refuse to back down on tariffs, the US economic growth rate this year could turn negative, while China's growth might be halved. Investors fearing a recession saw US Treasury yields drop sharply last Friday. The 10-year Treasury yield hit the 6 month low before offering around 4%. The 2-year yield fell 6.1 basis points to 3.664%, and the 30-year yield dropped 6.9 basis points to 4.417%. What did Fed Chair Powell say? Speaking at the Society for Advancing Business Editing and Writing annual meeting last Friday, he warned that the scale of tariffs imposed by the Trump administration could have an economic impact far beyond expectations, driving up inflation and dragging down US growth. The central bank must ensure that this doesn't spark even worse inflation. Powell's tone was more cautious than at his March 19 press conference, where he had said tariff induced inflation was expected to be temporary. The US will release its March CPI this week, and markets will watch whether tariffs implemented before April 2nd have reignited inflation. Additionally, major US banks will begin reporting Q1 earnings this week. Turning to Hong Kong stocks, the market dodged last Thursday and Friday's US sell-off due to the Qingming Festival holiday. The Hang Seng Index hit the low of 22,638 last Thursday, closing at 22,850, down 577 points or 2.5% from the previous week. The H-share index and Hang Seng Tech Index fell 2.2% and 3.5% respectively for the week, marking 4 straight weeks of declines for all three indexes. In mainland China, the Shanghai Composite closed at 3,342 last Thursday, down 0.3% for the week, a relatively mild drop. The Sunshine Component and CSI 300 fell 2.3% and 1.4% respectively. The Nasdaq Golden Dragon China Index, tracking Chinese concept stocks, plunged 8.9% or 669 points on Friday, closing at 6,880, down about 18% from its mid-March peak. Hong Kong ADRs suggest the Hang Seng will open 1,834 points lower today at 21,015. Technical analysis. The Hang Seng's rally from its January low of 18,671 to its March high of 24,874 gained 6,203 points. A 61.8% retracement would bring it to 21,040. Holding above 21,000 could still be seen as a correction, but a confirmed break below 21,000 might signal the start of another downtrend, with the next support at 20,200. The tech index peaked at 6,195. It dropped below 4,956, which is a 20% decline, would signal a technical bear market. The 100-day moving average, currently near 4,950, is key. If breached, the next support is 4,740. Amid risks like tariff wars, inflation, and recession, investor sentiment is shifting from FOMO, fear of missing out, to FOWO, fear of wiping out, favoring cash. Since early April, over 60 billion US dollars has flowed into money market funds, offering a 4.2% yield in the US, a solid choice in uncertain times. Phillip's Hong Kong Dollar Money Market Fund, an SFC approved public fund in Hong Kong, invests in bank deposits and short term high credit bonds with a 7-day annualized yield above 3%, comparable to fixed deposits but with instant liquidity. Lastly, it's difficult to estimate how much the broader market and individual stocks will open low today, as well as the extent of their volatility. Therefore, there will not be any stock pick today to avoid the situation of buying and stopping loss on the same day. We hope for your understanding.